I'm Eric Macy with Russell Investments. One of the great parts of my job is that I get to spend time with institutional investors around the country talking about their goals and challenges. While every one of them is in a unique situation, they more or less agree on one point. Managing an institutional investment program is not getting any easier. Volatile markets, new regulations and accounting rules, complex new investment strategies, all are driving investors to question the status quo. More and more often, they're asking about investment outsourcing options in their RFPs and in conversations with industry peers and consultants. These days, a familiarity with outsourcing, whether you call it outsourced CIO, implemented consulting, or fiduciary solutions, is essential. I'll just take a minute here to share the 5 themes I hear most often that lead institutional investors to consider a different type of fiduciary solution. Here's the first. They're challenged to find the time or resources needed to manage their investment program themselves. Hey, business conditions are tough. Budgets and resources are constrained. On top of that, complexity is growing. The second reason I often hear is a familiar one. Meeting return or spending targets in today's markets is a real challenge. Now more than ever, missing your investment targets can lead to painful and direct consequences for your organization. Pensions may be required to contribute capital to fund their plan that might be desperately needed elsewhere. Market volatility has only amplified the challenge of meeting these targets. Next, they want to incorporate more complex disciplines in their investment programs that require specialized skills or experience. Look, best practices in the investment world have changed. This isn't just about stocks and bonds anymore. Some of the latest innovations in investment management offer real solutions for helping manage volatility, hedging risks, and taking advantage of opportunities as they arise. We do this at Russell by building liquid and illiquid return-seeking strategies, customized liability-driven investment programs, dynamic glide paths, portfolio tilts and overlays. The fourth theme I hear repeated frequently is the need for more nimble portfolios that can take advantage of dynamic market conditions. Look, an opportunity that arises in February or March, is it still going to be around when your investment committee meeting meets in April? I don't know. Markets are fluid, they're volatile. Opportunities arise today and disappear very quickly. Look, here's a suggestion. Hire a provider who will commit portfolio managers to work on your portfolio in a real-time basis every day. Finally, a simple truth. Managing investments is only a small part of their job. Hey, I hear this all the time. Whether it's a CFO of a software company that has a pension plan, or a doctor who sits on an investment committee of a hospital, typically they'll say, I have 9 or 10 other really important things on my plate. Managing these investments is only a small portion of my job. If any of these points have resonated with you, you're not alone. Russell has been down this path with hundreds of clients over the last 30 years, and we love these conversations. The best kind is when we find a solution with our clients that improves their fiduciary oversight while simultaneously reducing their operational and administrative burden. A true fiduciary solution. I'd be happy to talk with you about your organization's specific investment goals and challenges. Please feel free to call or email anytime. Thanks again.